So hello and good afternoon. I welcome you to today's special webinar, How to Trade the Market Opening of the US Markets. My name is Jens Klatt, and I'm very proud to be here today, exclusively for JFD Brokers, to hold this webinar. So hello and good afternoon. I welcome you to today's special webinar, How to Trade the Very good. So now I was able to hear me in the background, since I have another screen open here to double check everything in terms of the technical side. But first thing, I can see me. Second is I can hear me. So that's a very good sign. And yeah, so what we want to do today is have a look at the US market opening and how to potentially trade it with an, in fact, very simple but nevertheless highly profitable approach. It's called the open range breakout. Something you may have heard about already somewhere. Probably you have heard about it between the lines, read about it between the lines somewhere. So it's an approach which was not really invented, but brought to public attention during the 1980s, thanks to some articles and a series of articles here from a right now hedge fund manager. His name is Toby Crable. And so you can easily Google him and have a look. So this guy definitely knows his stuff and is a highly profitable hedge fund manager himself for, well, I think something like 20 years minimum. Yeah, and so I will just give you the setup here, even though it won't be only that we look at this setup here, because it's getting very interesting right now in several markets. So some of you might have seen the price action on Tuesday already in the Dow Jones. Dow Jones took a hit here, lost 400 points, even though when looking at the daily chart. And while you can screenshot this easily here, I will guide you through this a little later on. We will now switch over to the charts here. So I've already prepared the S&P 50-minute chart here with all the things I need, in fact. So what we need is the green line for the lows from yesterday, the red line for the highs. The deep blue line is the close price from yesterday, and the turquoise line will be the 2:30, in fact, of GMT time, 2:30 p.m. GMT. The first tick here, showing us the opening, and then we'll use the 10 moving exponential moving average here, the yellow line, as a trend filter. Everything above that is long, everything below that is short. So in fact, when looking at the open range, for example, yesterday, what you can see is that we started the day below this yellow line, even though the trade finally was triggered on the upside, since we broke out on the upside here at 4 p.m. GMT. So the high yesterday was of the time frame between 2:30 till 3:15 p.m. GMT. The high could be found at 2,788. So you were triggered. 1 second. 788.5. You were triggered. Yeah, in fact, you were triggered with the break above the back above the open price here, the turquoise line, and as you can see, the market took on took on momentum here on the upside, pushed higher and towards new all-time highs. In this case, this is the in fact, this is the S&P we're looking at here. So, and when I started here, I was talking about the Dow Jones, but the price action in Dow Jones looked similar. So made back most of the losses already the day before. That was on Tuesday already, and yesterday, well, we just took off. We just took off, made new all-time highs, and now the thing is, I mean, look at when we're trading. Look at the chart. Scroll in, and that means step back. Look at how elevated we are. Market's going parabolic here. And let's be honest, usually what you don't see is the market moving in such a parabolic move here and then stabilizing on an elevated level and correcting, let's say, over time, and not seeing a big corrective move here. So what do I mean by that? So usually you don't see the market going parabolic and then just build a sideways action here, even though this happened several times here in the past. But that's just not normal. based on my personal experience over years, and I'm talking about over 10 years of experience right now. So this is just something which is usually not happening. So if the market goes parabolic, what you definitely expect is the market to come down rather sooner or later, very dramatically and very aggressively here. And therefore, we have a perfect example. Have a look at Bitcoin, what's happening here right now. Even though yesterday we found buyers around 9,000, but this is it's not similar move, because we're talking about another time frame here. We're talking about a very illiquid asset. In fact, no depth of market, no real depth compared to US equities, for example. Not even close as much volume as traded in US equity markets here in Bitcoin. Nevertheless, that's usually what you get to see here, how such parabolic moves rather sooner or later are corrected. And the more illiquid an asset is, the higher the chance that that will take place within a very short period of time, even though rather sooner or later, I have to say, I expect something similar for the Dow Jones to happen. So I'm not saying that we are correcting 50% and more than that within a month or so, but at least a corrective move of something like, well, minimum 20% is I won't say overdue, but based on certain developments in several markets, especially when looking at the volatility, for example, when looking at the VIX right now. So I've prepared this already. Oh, by the way, 1 second. Okay, perfect. Let's have a look here at the volatility index. So it's unusual to see the VIX running up here that aggressively, while in this case, US equities are making new all-time highs. And the next thing you think about is probably there's something around the corner and the market is about to correct. So in the morning, I had a German webinar. There's also an English version to it, but I didn't mention it in the English version of the morning meeting. But I mentioned it in the German version. And what I told the audience there was, I said, well, what we have to be careful about is right now, when looking at the VIX here, what we start, and not just the VIX, but also the US equity markets and this parabolic move here, what we usually do is we actively are looking for reasons why the market has to correct. And I mean, this is definitely something you will agree on. I bet that you did exact the same thing over the last weeks and months, and actively looked for reasons why the market should trade lower. And in fact, it never did. In fact, we're waiting for a 3% corrective move here for how long? I think till November 2016, at least. That was when Donald Trump was elected the 45th president of the United States. So we are waiting for a 3% corrective move here for over 13, 14 months. And so the thing is, I mean, the longer the market pushes higher here, the more unattractive the risk reward gets. That's definitely true, even though the current momentum it can clearly be found on the upside. And even though volatility picks up, and it seems to be different this time when we look at those spikes in volatility over the last 12 months. I mean, all these spikes happened here, for example, in May, and then again in August. There were several spikes on the upside, pushing us to 14, 15 points here, and suggesting that something's now around the corner. So look at where we traded back then. For example, in May, that's August. Let's have a look here. So the market pushed aggressively higher from the beginning of last year, and then here something was around the corner. We've seen this aggressive move higher from around 17,500 points in the Dow Jones up to 21,180 around. And then the market started to correct some of it. And you might say, wow, this is really huge. We're talking about 700 points. Well, it's nothing compared to what we ran on the upside here before. And volatility spiked. I don't even know why. Probably because some story around the White House was shared again, and there was a potential impeachment of Donald Trump, and here and there and there and there, and then no one really knows why. Volatility spiked, and as soon as it spiked up, it crashed down again. So I remember in May, especially here, I remember that was one of the strongest rises in the volatility index, in the VIX here, I think, in the history of the VIX. While this crash afterwards here, and it took only several days to correct not just the whole move, but push below 10 again. That was, on the other hand, one of the most aggressive pushes here on the downside. And so what it perfectly shows is something we know when it comes to announcement around the political side here. So there's a saying in German, we say, politische Börsen haben kurze Beine. So the English version of this is that political market moves or political exchanges, or however you might put this, have usually short legs. So it's just short-lived pushes, and it's not a sustainable move. That's, by the way, something you should remember. We'll have a look not just at the US equity markets here, but also at the Euro USD, and have a deeper look at it. What to probably expect for Euro USD. Today, everything looks awesome again. After yesterday in the evening, we pushed aggressively lower. And nevertheless, I think we are not yet done on the downside. And I think there's some good potential for a further move on the downside in Euro USD down towards 121. But that's something we'll talk about a little later on. In fact, the push higher here was brought on way from something from the political landscape here in Germany. Since we see now a potential grand coalition forming between the Christian Democrats and the Social Democrats, and this political vacuum which we had here in Germany, the biggest economy in Europe, by the way, is finally to find that we are finally about to find a solution. Even though, well, if you ask me, I don't think that the solution we'll find here is one which is positive for the future of this country in general. So even though, I mean, look at where we stand right now here in, I mean, yeah, it's difficult to say. I mean, if I'm talking to a German audience right now, everyone would nod with their head and say, yes, like, you're 100% right. I'm not sure if this is true for an international audience here too. So that's why we don't go into further details on this topic. But the fact is that usually political lags political moves here in the markets are usually short-lived. And this is something which brought the push higher to multi-year highs in the euro last week on Friday. These talks, and I'm not sure whether this is really a sustainable move. But now let's come back here to US equities first. So the thing is that this time it seems to be different because we don't have such an announcement here from around the White House, Donald Trump, or it's not a political move, let's say, but volatility picks up for other reasons. Look here also at the developments in the 10-year yields, for example. One sec. Okay. Yeah. So I'll go into further details here on the questions a little later. Okay. So the problem is I have so many things to say that I don't really know whether, if I ask you questions which I really want to answer and I want to answer them in details, if I answer them right now, I think one of the problems could be that I don't get all the stuff here on the way which I want to talk about, because I think there are many interesting aspects right now happening in the markets. And but nevertheless, I will answer your questions. Okay. Even though, first of all, let's have a look here at the developments in the yield market. So we can hear chatter that this is probably a move which is showing that the bubble rather soon later in the yield markets will finally burst. And so now the interesting thing is that from a longer term perspective, one should be careful, because look at this push higher here that happened around the election of Donald Trump. And it was the so-called Trump trade taking place here. So what happened was that the market was betting on fiscal stimulus happening. And that was one of the reasons why they expected the Fed to hike rates faster than initially expected. And it was also that the market, and that's probably one of the main drivers for the equity markets in the US especially, that these fiscal stimulus rumors here, and finally, it's not just a rumor anymore, but we have the biggest tax reform on the way here in the US since, or for several decades at least, I think. The thing is that this move here drove really expectation that probably the US economy can finally take off. So today we pushed to the highest levels since these speculations around the election of Donald Trump took place. We pushed to the highest levels and higher than that. And this move here was mainly brought on the way from a speculation around the Chinese, which probably stepped back as buyers from US treasuries. That was a rumor which was spread last week. That was one of the main reasons, by the way. Here also, the Dow Jones in this case took a hit, at least small one. That was here. It's nearly 1 week ago. That was last week on Wednesday. If you look at the DAX, that it looks definitely more aggressive. So you can see this here. That was last week here. So we took a very strong, we had a very strong start into the year here in the DAX, and then we took a hit last week, and then it accelerated last week on Thursday. Even though we were capable of making back some of these losses. And so that's already one thing where you can see that the market right now is obviously not yet done on the upside. Because if you have such a development taking place here in the yield market, and the market really sees some kind of risk aversion, especially due to one chart, which is really not really encouraging, to be honest. So it's scary. It's a really scary chart, and rather sooner or later this will be a big problem for us. And we can only, yeah, it's pure speculation. It's pure speculation how central banks, especially around the globe, will finally get rid of this problem here. But what you can see is the margin, NYSE margin debt. No, that's not what I want. So the S&P in blue, and we can see the NYSE margin debt, which took new highs here last week. And so, I'm sorry, last month. It's a monthly chart. And so the interesting thing about this is that if yields rise, this becomes a first problem. If it's not because of expectations around a rising economy here. So, and this is something where this chart, this spike in yields, and this chart in terms of margin debt, both together becomes really scary for all kind of investors. We're not only talking about short-term traders, but we're talking about long-term investors and traders too, and midterm, and all traders around the world, around the globe. It could get a problem, because if this is not a move which is driven by expectations around a rising economy here, but because of risk aversion and big buyers stepping back from buying, let's say, yields in the US in this case, like the Chinese, this bubble could finally burst. Because if margin rises, or if yields rise, how's the word for this? You potentially get a margin call. So we have a similar environment as we've seen here around the big financial crisis shortly before that, because what you can see is that a margin debt rose sharply before, and with it, the Fed back then was hiking rates, and the market was highly leveraged, because it was buying a bet that economy will never ever turn sour again, let's say. And this is something similar, which is probably happening right here. That's also one thing. You can see this in one chart when looking at the dollar Japanese yen. So if you look at the Japanese yen, you usually, or dollar Japanese yen, if you look at this chart, it doesn't make sense at all because yields are rising. So this should usually result in dollar Japanese yen rising too. So that was the election of Trump, November 2016. Dollar Japanese yen took aggressively off on the upside. So now we're trading at higher levels in 10-year yields, but instead of rising sharply, the market instead pushes lower. So there's a huge divergence in yield and dollar yen right now. And if you ask me, I'm surprised to see this aggressive move higher yesterday here. Somehow it indicates that the market probably got caught on the wrong foot, and now risk aversion is coming down a little more. And that's one good chance that at least short term, there you have a chance that probably we are not yet done in equities on the upside, even though if we formulate a setup, and it really doesn't matter if you're a day trader or if you're a swing trader. For myself, and let's come down to the day trading time frame here. If I formulate a long setup, as we probably will do for today, based on the current action, and so far it doesn't look as if there's no real reason not to be on the long side. Well, I nevertheless want to reduce my position size here, and probably, let's say I usually risk 1%. I then go down to 0.5%, and I mainly do this because there are several aspects which are scary. I mean, this is a long-term chart here, so this is probably not yet a problem because seeing deleveraging here does not take place within hours, but it takes place. It takes place over days to weeks. In fact, that was around the financial crisis the case. That was you probably remember what happened during 2007. And that was, by the way, in summer, in August back then, when bear stearns went down. The market took a big hit and then recovered into the yearly close, and then took another quite bigger hit at the beginning of 2008, and it accelerated over the year into the yearly close, and we bottomed out in March 2009, and there was lots of money to be made on the short side during this time span. So this is something we probably shouldn't care about, but it's definitely something you should keep in mind when looking at the current developments in the yield market. So far, it doesn't look that bad because the market can recover a little, and yesterday's price action short term is definitely to be considered bullish. But nevertheless, and now we come to the daily chart here of the VIX, and I mean it's we are looking at the closing prices here. It's definitely something to worry about if you see volatility picking up while equities are still rising. That's definitely something worth worrying, and definitely something where you say, okay, you know what? I definitely look for reduced position sizes here when entering the market. Also here from a so-called open range breakout perspective. So now let's just see how the market opens. In fact, we have 7 minutes left, and so far it's no real need to take any action. In fact, what we will do is we'll look at the currency markets. I have to, by the way, say I'm not even sure whether the S&P is such a spectacular market right now. Probably it makes more sense to look at the market like the DAX, for example, because this built out a very, very narrow trading range. So if you're a DAX trader, if you're looking at European equities, I can say at JFD Brokers, the DAX German 30 is one of the most traded assets out there. So most traded CFDs out there. And so I have a very good chance that even in the English-speaking community, many people will look at the DAX. And in fact, the DAX is trading at a very, very interesting level compared to the S&P. So probably, even though we can formulate a setup on the S&P, nevertheless, the DAX is probably a little more interesting based on this narrow and tight range we are building here. So in the morning, we pushed slightly lower and tested the region around 13,200 points again. But right now we are drifting higher, and we are again focusing on the highs from yesterday, which can be found around 13,250 points. And oh, I'm sorry. Yes, 1 second, please. I have a message here. Yes, no problem. No problem. So I just learned about that we have to finish 50 minutes earlier. So we only have 20 minutes left, but it's no big deal. No problem. No problem at all on my end. Yeah, so the interesting thing about this is now let's get a little bit nerdy here. Let's freak out a little. Tomorrow there's a small expiration. It's an options topic right now. So we're talking a little about options. And let me have just a look here. No, now we have to open another tab here, and let me just give you a great source. Let me just give you a great source of input here around the Eurex. The Eurex is the stock exchange, or it's a futures exchange where you can trade the FDX. And what they offer is they offer input. Oh, by the way, this is German. We already also have the English version here on that. So in languages, you can find English here. So in fact, have a check here. Check it out. It's eurexchange.com /exchange-en/. And now, well, they just switched the website. Great to see that. Okay, let's go back then. So I just hope that they switched the website. It's also available in English here, what I just presented to you before. So here on the options side. So in fact, it's here. And there you can see the DAX on the options. It's ODAX, in fact. And if you scroll down, what you find out is here you have the statistics. And now you will look at the so-called puts here first. So the puts are showing you how big the interest of several market participants is to close at least tomorrow, or to trade above a certain level till tomorrow, 12 p.m. GMT. And what you can see is right now we're trading at 13,200 points. There's no big thing happening right here at all, except around 13,000 points. So what we can be quite sure about is that we will get to see a close above 13,000 points. And in fact, if we traded below 130, 150 today, so 13,130, 150, the region around the lows from yesterday, this would have been the next target and a potential target on the downside. Some of you might have been wondered what I mean by, and that we go on the upside. So now we get to see the breakout. And in fact, probably we'll take on several momentum here. And the DAX is not yet done, but probably pushing towards 13,350. And I tell you the following: there is some rumors spreading that there is some gamma hedging going on. This is what I mean by some freaky stuff now, because there are also speculators who are probably trading around this expiration day tomorrow, and who have to hedge their exposure once the DAX is pushing above 13,250 points. And this is exactly happening right here. And that's why it's so interesting to watch this level and this range building, because if the market breaks above that level, as it does right now, this favors further upside momentum, which could easily push us as high as 13,350 points. The interesting thing about this is, by the way, and that's something I mentioned in the version of the morning meeting today, in the German version minimum, probably also in the English version of that, I said you really like to get to see this push higher, because it makes it possible to move the stop to at least break even, because the risk is, and that was something which happened yesterday, the DAX was not behaving very spectacular. In fact, it did. I'm sorry. On Tuesday, it pushed aggressively higher, but sold off sharply with the US markets opening and US markets coming under pressure. And that's something similar which could happen today. So, and that's why when you enter the market long in the morning, you definitely want to see the market pushing to a level here, which is giving you some room to breathe. And if US markets open sharply higher now and push higher, well, there's further momentum to be expected, which can push us another 100 points higher to 350, the region around the highs from Tuesday. But if this does not happen and US equities show that finally they are about to correct some of those gains here, because as already stated, we went parabolic over the last weeks here, well, then you have at least a good chance to trail your stop to break even. That's, by the way, also one of the good reasons why I'm right now, where in 1-2 seconds probably, becoming or getting a little more silent here, because I have a position going, which I have open on another screen here, which unfortunately I can in fact share. So I can't share it because I can't share it. It's not because I don't want to show you the position, which is no big deal. So I'm currently in fact long the DAX, but I'm not capable of showing you my screen here in the remote section. So you can see this here at the bottom of my screen, and it's a remote screen. So I'm running a VPS here. So it's an automated trading strategy where I'm currently long the DAX. No big position on, nothing big. It's only 15 contracts here, so 15 euros per point, not even one FDAX, which is usually coming down to 25 euros a point. But nevertheless, I just can't share the screen because it's not technically possible to share the screen. And so I would probably have to focus on the screen in a few minutes here if the market comes down again, which I don't want to see. And I'm planning to take up the position if we push below 13,225. If we do, that's the thing. I to be honest, don't hope that will happen. Since if you're long, you're looking for higher quotes here, but that's definitely something which I have to worry about. And probably if I just keep become more silent or so, it's because I have to focus here on the other screen. So that's it on the DAX right now. And right now we have seen this push higher, and that's probably even more interesting than that what we get to see here in the S&P, because the S&P, yes, there we have to wait at least another 45 minutes. So this is, by the way, now the turquoise line, which is going up to this level. That's the first tick at 2:30 p.m. GMT, and we have to wait for the first 45 minutes of trading here, 2:30 till 3:15 p.m. GMT, until we have this range, and then we will identify the range and trade the breakout in direction of the identified advantage, which means we are looking not, in fact, based on Dow theory, but we'll look at it from a 50-minute time frame and the exponential moving average 10 here, where we trade. So if we trade above this 10 exponential moving average 10, we'll trade the breakouts on the long side. If we're trading below that, we're trading on the short side. That's it. And the risk is identified by placing the stop above, respectively, below the high, the low of this range we identify between 2:30 till 3:15 p.m. GMT. So in fact, let's have a look at it from yesterday. So to give you an example, so the open range, and therefore let's use two lines here. So the open range was here. That was the level at, you remember, at 89. Was it 89? No, 88. It was 88.50. So here. And so we can copy this line here, and there was the low. That was, in fact, the green line. So, in fact, we don't need to okay, we take out the green line. Let's do it that way. And what we do is we identify the breakout on the upside of this range within this time frame, and we are trading then above this yellow line, and then we are entering the market here with a long position and placing a stop below the lows within this time frame, with respectively below the range here. And then we're going long here, placing a stop here. As you see, yesterday worked out pretty well. And in fact, this open range setup works really well on the long side right now, because, and this is something where you can only smile about, if you see the market going parabolic, it's fantastic to see that, but it's even more fantastic if you're on a long side and you just see the markets being bid all day long. It's no setback, anything, no pullback, nothing. It's just like the market breaks out and just moves in the direction of the breakout. And finally, it stops somewhere and then is going out of the trading day around the highs. And from a trend following perspective, it's really great. And in fact, that's how you enter the trade and how you set your stop, and you let the market run right now till 8:50 p.m. GMT, and then you just take it out. In fact, and this is the interesting thing. So let me just show you a chart here. 1 second. I have to see where I have it. Strategies. And here is a picture around the strategy, how it performed over a time span of the last 7 years, 7.5 years, so till November 2010. So this is the equity curve, and you can see that the hit rate was 47%. And in fact, we worked with an exponential moving average 10, as seen here in yellow. And this approach did not work with take profit levers or so, but it worked with like go long and take out the position with a time take profit, let's say, at or around 10 minutes before the market closes. And as you can see, it worked out. So in fact, the parameters of the strategy are very simple. It's 3 steps. Identify the open range between 2:30 till 3:15 p.m. GMT, high and low. Then identify the advantage. You do this with the 50-minute exponential moving average 10. We trade above that, go long. We trade below that, go short. And then we trade the break of the open range. And the stop can be found then at the low, respectively at the high, depending on where the breakout occurs. That's it. So 1 second, please. I just have to double check here. Okay, DAX is now pushing towards 13,300. No surprise here with this move. And by the way, I just trail my stop now to break even. So seeing the positions moving 60 points in my direction. By the way, I just, you know what I do? Because there's only, this is a problem, right? So you might have listened to several guys presenting content and talking about trading and all that stuff, but you never really know, do they really make money trading the markets? And do they really trade? And now I'm coming up with a story, which is like, I can't share my screen. And we're in the 21st century. And so what I will do now is the following. So at least let me screenshot this for you. So here. So here is the screenshot, and I'm not talking about this. And what you can see here is, the only thing you can't really see is that it's a real money account. But I can screenshot it for you too, if necessary. I don't think so, but yeah, that's a real money account, real money. I'm trading here, and there you can see, by the way, the 15 contracts I was talking about. You can see here the DAX, you can see the entry price, and you can see the current level, 288.75. Okay, so I'm really having a position, and as you can see here, I'm ahead there this amount. There you can see it's not the complete sum. In fact, I'm currently short Euro USD too. That's why it's not 1 grand I'm ahead, but only this, because the position I'm having in Euro USD is not moving my direction. And that's something I wanted to present to you too. So I went short yesterday in this move here of weakness, and that's also one thing I'm currently looking at, and I'm a little skeptical how the DAX can be that strong while here the euro is so strong too. So in fact, I'm short the euro at around 122.10 or 122.15. And so the market is moving 30 pips against me, which is no big deal since my stop can be found around those highs here, and I have still some room on the upside. And nevertheless, so one reason you might wonder is why are you short the euro? And that has something to do with the weakness yesterday. That's the first thing. So this aggressive push lower, why I don't really know what happened here, but US dollar is probably a little overextended. And especially when looking at the yields right now. So compared to the euro, compared to the Japanese yen, even though we're looking at a very big time frame here, the thing is that, I mean, compared to the euro, US dollar is just very attractive from a yield perspective. Same is true for the Japanese yen. So when the dollar is trading lower, especially against the euro here, that has to have other reasons. And one main reason is, in fact, that last week here, that was what I was talking to and referring to in terms of this political developments here in Germany. We broke to new highs compared to yearly highs, but also the high above the highs from 2017 and to the highest levels till December 2014. In fact, last week when there was this announcement that there's finally a solution found from a political landscape. here in Germany, and I don't buy the story, even though the market took on further momentum. But when it pushed to new highs yesterday, on a 4-hour chart, you can see that the market did not confirm this here on the RSI 14. And I carefully watched this because it's a sign from a technical perspective that the market is losing momentum on the upside. Also, I have to say, again, from a sentiment perspective, when looking at the commitment traders report, for example, the market is aggressively euro long right now on a broad front, on a broad scale. You really don't know why, to be honest, because there are so many reasons to be skeptical. And now several ECB officials coming out and tell you, hey, by the way, we look at this development here in the euro, and it's probably a sign of uncertainty. What do they exactly mean by that? I mean, you look at the market and you see the market rising for quite a while right now. What kind of uncertainty are they referring to? So we started taking off in the euro last year around the election in France. So I'm not sure what they mean by that. And well, if you carefully watch and listen to what they have to say, you know, well, they say that because they want the euro to be lower, significantly lower. And I think it's just a matter of time until someone from the ECB comes out and starts to really aggressively talk the euro lower. So they took several attempts already. By the way, 1 week before the ECB takes meeting next week on Thursday. Well, all these attempts, they just failed. And they were not capable of talking the euro lower. And so it's just a matter of time, I think, till someone from the ECB comes around the corner and we'll talk aggressively the euro lower. And probably, well, we get to see this within the next days, probably tonight. I don't know. All I can say is that right now, I'm not yet very losing my mind about this move here higher, even though this push lower was already very interesting. And the push back towards 122.20, 122.30 was a potential a short trigger. Now seeing the euro pushing higher from here is something which is not very positive, even though everything below 123 from a short-term perspective can be considered potential short entry. And I'm not yet done. I'm thinking that probably the euro will see another leg lower and probably test the region around 120, 160 again, probably even push lower than that and go towards 120.80, 121, which is giving you, from my entry point with a stop above these highs, at least a risk reward which is slightly better than 1-to-1. It's not the best and the most attractive setup ever I've traded. So there were setups which had a way better risk reward, but it's at least fair to give it at least a try here. And yeah, let's just see how things develop. So currently, the market is not moving my direction, which I watch it closely, even though I'm still fine with that. And probably we will get to see a similar move as yesterday. By the way, let me just have a look here at the DAX again. Yeah, now we are coming lower again. So it's not the worst idea probably to be more aggressive with the stop since, and this is the thing, even though we decouple a little from the euro, but what the DAX does right now is it reacts to the strong euro, and usually it should react exact in the way it does. By the way. Okay. Yeah, let's just see. I mean, if this is coming to an end here in the next day, in the next hours, what we get to see in the euro right now, pushing higher and correcting nearly 100% of the move from yesterday, and the euro is coming lower from here, we have another chance, probably a final chance to make it towards and above 13,300 points. Else, well, I think it's not the worst idea to have trailed the stop to break even. So 1 second, let me just have a look here. Okay, I can see someone asking something on Euro Japanese yen here. Let me have a final look at this, and then we have to come to an end here. So that has been a very, very aggressive move higher. So we are using the charts here from JFD Broker. So we've seen a very aggressive move out here of this range. Now the market pushed aggressively lower towards the breakout level, now pushing higher again. I have to be honest, I'm a little skeptical whether this is really a sustainable move. Again, it's the same as with the push in the Euro USD. It was based on it was mainly based on in fact, the retracement and acceleration here towards the side is based on these announcements around the political landscape in Germany. Not very confident if this is a sustainable move. One of the reasons why you should be probably a little careful. And if we move to these highs again and we can't significantly make it through this, probably Euro Japanese yen is worth a try here to aggressively short it against these levels, and probably push lower from here. So not really sure whether this really can, that the Euro Japanese yen can move on with this push higher here, but instead probably we'll see the highs quite soon and push lower from here. Yeah, so these are my thoughts on Euro Japanese yen, and that's it from my end. So I then want to end this webinar here because there is someone else waiting for another webinar right after me. I'm not sure about his name, but I'm sure that he can deliver you with really good content. So feel free to join him too. And yeah, so that's it from my end. Happy trading. Watch your stops, and talk to you again then next week, Thursday at 2 p.m. GMT, around in fact the ECB. So I think we will go live here with a market coverage around the time when Mario Draghi still speaks. So let's see how much volatility he can deliver for the euro. I have to be honest, I think it will be quite a lot of volatility. But yeah, let's right now focus first at the developments in the US equity markets and in the DAX probably. And that's it from mine. So happy trading. Watch your stops. Take care. See you next week on Thursday. Look forward to it. Yeah, have a nice evening. And bye-bye.